Hi everyone, welcome to another video by Optionables. My name is Saket, and today in this video we are going to look at what happened to the markets, what we can expect from the markets tomorrow, which is an expiry day trade, and finally what happened to our trade. So today the markets opened around 200 points higher. So there was some positive global cues from US. So US also ended around 2.5-3% higher, almost at the day's high, and this sentiment was carried forward to Asia as well. So even Asian indices were trading higher, and even Indian markets opened around 200 points higher. So after it opened 200 points higher, throughout the day up till the end around 3 o'clock, the markets ended up consolidating around 16,900. So it was just trading in the small range of 70 points up and down, and throughout the day consolidated around 16,900. And finally towards the end we saw some very strong buying coming, especially in IT and FMCG stocks, which actually took the market higher to the day's high of 16,970. So there are quite a lot of positive things what we can take from today's market rally. One, we actually opened gap up and we sustained throughout the day and ended at day's high. So this is a very positive news because this suggests a lot of strength in the market. Nowhere we saw markets going into sell off and later buying coming in. So throughout the day there was good consolidation and we ended at day's high. This is the first positive news. The second positive news is that almost after 2 months, that is 60 days, FIIs turned net buyers. So the last time they ever ended up purchasing was in January 11th, if I'm not wrong, and today is March 16th. After 2 long months, they finally turned net buyers, even though the buying figure is very small of around 160 crores or something. So the good thing is they turned net buyers, and even DIIs continued to buy. So they also bought somewhere around 700-800 crores. So overall this supported the markets, and markets also closed around 17,000. Now coming to the third most important thing, today if you see, except for pharma, which marginally ended in red, all the sectors ended in very good positive note. So the thing is, all the sectors were up on an average of 1 to 2%, and even indices was up by 1 to 2%. So this is again a positive news. So it is not sector based rally, or it is not stock based rally what we are seeing now. So we are seeing buying coming across all the sectors, which is again a very good news for us. So this will bring us to the next question, what we can expect from the markets tomorrow on an expiry day. If you look at the global markets now, DAX, CAC as well as FTSE, that is a UK index, everything is trading up by 2 to 3%. So we can expect the same sentiment to continue to US as well, and even Dow Jones as well as Nasdaq to open up higher. So if this is going to continue tomorrow, then we can easily expect the market opening to happen above 17,000. So in case if we end up opening above 17,000 and if we sustain 17,000, then we can definitely call it a bottom has been made for the short term. So tomorrow's price action is going to determine a lot of things, whether we are going to face short term resistance at 17,000 and sort of conclude that we have made a bottom for short term. For tomorrow, we also have one more very important event, that is Fed FOMC meet. So this is going to be very crucial. So the thing is, everybody is expecting a rate hike, but what is more crucial is what is the outlook Fed is going to give. So even though inflation in US is at a decade high, almost, I think if I'm not wrong, so this is the highest in 40 to 50 years. In spite of this, since the war is going on, so they won't be very hawkish. So this is the expectation. But in case if they turn out to be hawkish, then the markets will be beaten down pretty badly. Or if they maintain a dovish or accommodative stance, then that is going to be taken as a good positive note from the market. So tomorrow again is quite crucial, and since there is a news based event happening, open interest or technicals is not going to help much. But what is really going to help is where exactly the market is going to close towards the end. In case if it is closing above 17,000 with strong buying coming in from both FIIs and DIIs, then that is a pretty positive note, and we can conclude that we are more or less making bottom for the short term. So now coming to our positions. and I'll be telling you what exactly happened. So today we were having a short straddle of 16,900 throughout the day. So towards the end, what happened, as the market started rallying, the CE side stop loss got triggered. So I will just show you the screenshot. There is nothing much to explain over that. So the CE side stop loss got triggered and we were having 16,900 short straddle. So once the CE side stop loss got triggered, so the market was heading upside and we expected the PE leg to decay. But unfortunately for us, even though the market ended at almost the day's high, we did not find any decay happening in the PE leg. The main reason for this is there is Fed meet today, and that's the reason even though the market was heading up higher, the premiums in fact in the last 30 minutes ended up gaining. So this particular leg was trading around 85 rupees and towards the end it closed at 95 rupees, even though the markets almost closed at the day's high. So that's the reason we didn't see any decay towards the end. But one thing is that tomorrow morning, in case if everything is as expected, then we will see a very good decay, because tomorrow is expiry and we have a news based event following that. Because tomorrow is expiry and we have a news based event preceding that. Since today was a very simple trade where we did a 16,900 short straddle, CE side stop loss got triggered and P side didn't do much of a we didn't get much of a decay on the PE side. So that's the reason I'll just be attaching the screenshot and also the order book, so you can just look at it. Tomorrow is an expiry and I'm pretty sure that I'll be taking more trades than what I took today. So that's the reason I will have the full recording shown tomorrow as to what exactly the trades we took and how exactly we managed the positions. And apart from that, as you all know, we are having a lot of bullish positions. So I had uploaded one on Twitter also, a lot of ratio spreads which were bullish, and all those are giving quite good profits. So today we ended up making around 2 lakh loss in our intraday trade, and we made around 20,000 profit in our positional trade. Overall we ended with a loss of around 1.8 lakh. So this is quite okay, because tomorrow is expiry, and if the positional trades go well, so we will be recovering most of it, as well as in intraday, even if we do somewhere around 1 to 2 lakh, so that should be more than enough to cover our losses. So with this, this was a short video, and with this we also come to the end of this video. So I hope that all of you have a great expiry tomorrow, and also if you're liking the content on this channel, please don't forget to hit the like button, share this video, as well as subscribe to Optionables. Thank you so much for joining, guys.